Next up, we have a panel discussion on the topic of Blockshow, Millennial Investment Trends, New Wave of Personal Finance. The new generation's view on money, its influence and intrinsic value is steadily changing. What are we doing about this new gen that looks at money so differently, and how can innovation keep up? And if you just joined us, this is our Singapore FinTech Festival 2020. And we're going to go online for 24 hours for 5 days with more than 40 global satellite events in fintech hubs all around the world, comprising of both physical and digital formats. For more of our program lineup, do visit our website at fintechfestival.sg. We're going to jump right into our panel discussion. And on our panel today, we have Ms. Kantorovich, Strategy and Operations of FalconX, Mr. Zachary Prince, Founder and Chief Executive Officer of BlockFi, Mr. Michael Sonnenshein, Managing Director of Grayscale Investments, and also our moderator, Mr. Joon Wong from Amplified Event Strategy.
Hey everyone, I guess we're live.
We are.
Thank you for joining us on this fantastic panel, everyone who's watching, and welcome to all the panelists. Should we do the sort of the customary thing? We'll go around with quick intros for everybody. Maybe I'll start with Aya, who is on my right, I guess.
Hey, Joon. Hey, everyone. Super excited to be here with you all. And thanks, everyone who's watching, and of course, the conference organizers. Huge shout to them as well. My background, I am head of institutional coverage at FalconX. We are a digital asset trading platform for cryptocurrency. Prior to that, I was at Pantera Capital, which is the oldest and largest cryptocurrency hedge fund in the US, primarily working on the venture side of the business with Dan Moorhead, who I believe just spoke right before this, as well as Paul Varadatakit. So very excited to dive into this today. Thanks, Joon.
Awesome. Zach, do you want to go next?
Yeah, sure. Hi, everybody. I'm Zach Prince. I'm the founder and CEO at BlockFi. We're a financial services provider to crypto investors. We have a suite of retail products and some institutional products. On our mobile app or our web app, as a cryptocurrency investor, you can earn a yield on your Bitcoin and stablecoin and other cryptocurrency holdings. You can buy and sell crypto assets with no fees, and also get a loan secured by the value of your portfolio. We recently announced that we're launching a Bitcoin rewards credit card, which we're really excited about. And on the institutional side of our business, we're alongside Genesis, one of the larger lenders of cryptocurrencies to institutional market participants. And we're also a very active participant in the Grayscale suite of products. So I'm really excited to be here with all of you, and especially Michael. Always great to be with you, man.
Indeed. Hi, everyone. Great to be here. I'm Michael Sonnenshein. I'm Managing Director at Grayscale Investments. We are the world's largest digital currency asset management business. We now manage a little bit north of $12 billion, and that's spread across a family of 10 different investment products. I think for us, we were early to identify crypto as an asset class investors wanted exposure to. And while it's become orders of magnitude easier for folks to access directly, a lot of investors are looking to make crypto allocations through the types of channels that they're normally doing them, which is to buy a security and have it look and feel similar to stocks, bonds, and other financial instruments that they invest in. And so Grayscale's mission has really been to make digital currency investing as easy for investors as possible. And we are really excited to be here today as well.
Awesome. Thanks to all of you. Just by way of introduction, I'm Joon. I was an early journalist at CoinDesk, covering the whole of crypto. Really was just Bitcoin back then in 2013, and I helped start the Consensus Conference, which CoinDesk still does very successfully. And today I help projects in the space put on really high quality events and conventions for all their disparate stakeholders. So that's me. So let's dive into the panel topic, which is millennial investment trends. I mean, besides sort of flat whites and avocados, millennials seem to have an appetite for for all things crypto. I think a good starting point might be the famous Charles Schwab survey that happened last year, in which or people who identified as millennials listed Grayscale, GBTC, in their top 10 holdings, above Disney and Netflix, but below Tesla, admittedly. And so I'm just curious, Michael, if since that survey came out, what have you seen among your sort of investor base? Are there any sort of trends or other information that you can sort of share with us?
Yeah, so I think just to level set for anybody listening or watching, the survey Joon is talking about came out of Charles Schwab last year, and it looked at a couple of different verticals separated by age of different groups of Schwab clients, looking at what were their top 10 equity holdings in their self-directed accounts. And not surprising, you saw a lot of overlap between the baby boomers, the Gen Zers, and certainly between the millennials. Everybody kind of was invested in stocks like Apple or Google or even things like Disney. But the one big standout was that in the millennial segment, the fifth most held security was our Grayscale Bitcoin Trust, a long-only passively managed Bitcoin fund. And I think for us, super exciting to see that the product and Bitcoin more generally as a theme is resonating as much as it is. And it's not just something we're thinking is happening, but we're actually seeing it take place in those allocations. And I think it really, Joon, speaks to what we believe is a really important trend for investors to understand, which is over the next 25 years, I think it's $68 trillion of assets are going to move from older generations down to younger ones. And we're not saying $68 trillion is moving into Bitcoin, but we'd be hard pressed to believe that at least some of that isn't going to move into assets like Bitcoin or the digital currency asset class as a whole. And so I think over the course of this year, we've seen continued participation from those younger generations and younger audiences of investors. And I think we're only at the tipping point.
Yeah, I should add that I actually got in touch with Schwab, because that came out, I think, with Q3 2019. And I asked them if they had, any newer data, and they said that was a one-off. So, we don't have newer data points to compare it to, but nevertheless, very interesting. Maybe we can go to Zach here, because you're also, BlockFi is also consumer-facing, retail-facing. I'm wondering, do you see appetite for crypto assets among, let's say, millennials?
Yeah, absolutely. I mean, look, I think structurally, Bitcoin as an investment and also other cryptocurrencies as an investment are capturing three really, really big macro trends in the investment world. One of them Michael touched on, and this question kind of touches on in terms of demographics and the preferences of younger folks in terms of their investments versus older folks, and the transfer of wealth that's going to happen. And as a result, you would expect to see inflows into the things that millennials or other younger folks, allocate more to than older generations. The other two trends are increasing allocations to alternatives. Institutional investors have, steadily over the last couple of decades increased the percentage of their portfolio that's allocated towards alternatives. And if you include cryptocurrencies into this alternatives bucket, which I think makes sense for a lot of folks in terms of how they think about where it fits within an asset allocation framework, you would expect it to grow as a share of that alternatives bucket. And then the last one is digital versus physical. COVID accelerated this, but it was a trend that was already in place, well before COVID. If you think of Bitcoin as digital gold, which I certainly do, a lot of people do. That's one of its, value propositions. One of the reasons it's, valuable. It should do really well, and you're starting to see some really interesting data points on that front, with gold funds experiencing outflows. And funds like the Grayscale Bitcoin Trust experiencing record volumes of inflows. And I don't think any one of these three things are going to change. And I think you're going to see increasing awareness from financial services companies and other types of brands that this consumer group of, millennials, or call them crypto invested millennials, is an insanely valuable group. These aren't people who are like weird and living in their parents' basement. These are people who were ahead of this trend. They're smart, they have money, they're younger, they're technologically savvy, and they chose to invest in, Bitcoin, or the Grayscale Bitcoin Trust, which has been, the best performing asset class of the last decade. And so what better consumer group would you want to have a relationship with, or build products for, or create, targeted messaging to try and build an affinity with your brand, than the group of individuals that's investing in this asset class?
Yeah, no, those are great points. And, we'll dive into the reasons why we think that's happening next. But maybe Aya, you have a slightly different viewpoint because you're not sort of directly retail facing. I wonder, as far as activity that you see, are millennials really investing, really interested in this asset class?
Yeah, so I'll voice something that I think both Zach and Michael touched on, which I think if you were to summarize it, it's really a question of accessibility. And so a year and a half ago, FalconX, we've had exponential growth. We've grown 200+% in the last 12 months. And a lot of that initially started with the personas of cryptocurrency systematic funds and hedge funds, and has over the last 6 to 8 months actually progressed and diversified into retail aggregators, payment providers, folks that are facing retail that need good liquidity. And so I think that voices that a lot, and it goes back to, how do you make this accessible to this new investment class? I think some data points that I think are really interesting is that in comparison to 2017 and what we saw in 2017 and 18, the wave that we're seeing right now is currently being led by institutions. This morning, I think it was MassMutual just announced a $100 million investment into Bitcoin. You're seeing folks like PayPal, Cash App, Revolut, Visa, SoFi, all these more like fintechs are getting very involved, as well as traditional folks like MicroStrategy and Paul Tudor Jones. And so I think all of this is creating this really awesome momentum where we're really excited about this space. GBTC, the all-time highs in terms of locked up value. This is such a great data point and just an affirmation to the space. I think it's incredibly amazing. And again, it creates access. If you look at like 401ks, you're looking at IRAs, that accessibility is really important, not just for your high net worth institutional investors, but for millennials as well. I think one other thing that I think is really interesting too is even if you look at open interest on the CME, that launched in 2017, it's reached all-time highs as well. And so again, going back to this momentum, it's looking healthier than what we saw in 2017, 2018. There's much more liquidity. There are more wallets holding Bitcoin to date than there was in 2017, 2018. It's not massively controlled by these crypto whales that we saw previously. And I think that's really, really great, a testament to the space.
Yeah, we've been talking a lot about Bitcoin specifically, right? And I wonder if Bitcoin is the thing that millennials are buying. I mean, I think, Michael, you have some insight into this. I think there was a survey or some data points that you guys have around Bitcoin versus other products, crypto assets.
Yeah, I mean, there's zero question that the investors who are approaching this asset class today are probably as best informed as we've probably ever seen them. We're not spending time talking about crypto 101 and 201, and we're having much more thorough dialogues about the role that crypto can play in their portfolios as a diversifier. But I think while it's probably generally accepted now that the diversification benefits of crypto as an uncorrelated asset warrants a role in someone's portfolio, I think what's now starting to be even better appreciated is the idea of diversification within somebody's crypto portfolio. And so for a lot of folks, I think it's important that they're starting to look at other assets that have also demonstrated a lot of staying power similar to Bitcoin, assets like Ethereum or assets like Litecoin, which have managed to, in a world that continues to challenge them and sees other cryptos getting launched, have managed to maintain really large market share, high volumes, use cases continuing to be developed, adoption and access points continuing to be developed. And I think for us now, we've seen, I think certainly in 2020, with really the emergence of DeFi and a consistent focus on it amongst the investment community, almost the kind of the solidification of a new class of investors that are either Ethereum first, or in some instances, Ethereum only, thinking that they're looking at use cases for crypto very much centered around that whole ecosystem, separate and distinct from the use cases that Zach and I are certainly speaking about around Bitcoin being digital gold, and some of the other narratives being to get developed around different crypto assets.
Well, yeah, I'd be curious here, maybe Zach or Aya, what is the Ethereum? What is the narrative around Ethereum? If Bitcoin is digital gold, what's Ethereum?
Yeah, I think the original analogy I made in my head back in 2016 when I bought Ethereum for the first time was that Bitcoin was kind of like a BlackBerry and Ethereum was kind of like an iPhone. And the iPhone came up with this great concept that you should be able to build apps on top of the operating system for the phone, and it opened up this developer ecosystem that is arguably one of the best things about iPhones today is all the different apps you can download on it. And I think while I don't necessarily still hold that same view in terms of the analogy, I think that's really the story of Ethereum. And the applications that are biggest right now on Ethereum are stablecoins and different types of fully decentralized smart contract-based financial services, which folks refer to with the term DeFi. And both of these things are incredibly powerful. So with stablecoins, the idea is that you can take a dollar or another currency and make it available to anyone around the world on a blockchain payment network, which is very different from a dollar in the traditional financial system where access to it is constrained or restricted or illegal, depending on where you live. And sending it across borders or on a Sunday afternoon might be really expensive or impossible or slow. And for the decentralized financial applications, that's an extension of what firms like BlockFi and FalconX and Grayscale do, where you're building an infrastructure around these assets and what you can do with them and how you can trade them and whether you can earn a yield on them or use them as collateral for a loan, but doing it in a way where there's no KYC. It's completely, every part of the design of the system is open and transparent all the way down to the source code that's running the applications that you're interacting with. And this is just the beginning. Just like the internet, when it comes to application development, I think we've seen already an explosion of ideas and things being tested out, and a couple of things starting to have real traction now with stable coins and decentralized finance applications. But there will be other things that maybe don't exist yet that also, I think, achieve tremendous success. And Ethereum is the network that powers the vast majority of this development today. So maybe instead of the iPhone versus BlackBerry analogy, I think of it now more like, Bitcoin is digital gold and Ethereum is digital oil. You need it to run these applications that people want to use and are using in greater and greater numbers every day.
Yeah, loving the analogies, digital oil. Aya, we talked a little bit about this in the prep session. The other big sort of impact on the markets by millennials was the kind of Robin Hood rally, right? That happened earlier this year, and people have kind of theorized that one reason why that happened is because of all the fintech apps that are out there now that kind of gamify the stock market, right? You just open your app, press a button, and you're trading equity. So I'm wondering, from a cryptocurrency point of view, one of the big arguments has always been, well, we need better UX, better user experience, right? And then you'll have mass adoption. You know, do you see that happening right now with the financial products that we have at crypto, or what other work needs to be done on that front, do you think?
Yeah, absolutely. So first on the points mentioned earlier, I'm actually going to take an opposite view. I actually think that millennials do not understand crypto, and investment opportunities happen because there is asymmetry of information, right? And so most of my friends actually ask me on the daily, should I touch Bitcoin? What is it? Can you please hold a YouTube series on this? I actually find one data point really, really interesting. But one thing we don't think about is where most people that we consider to be millennials, what that age group even is, but where most people get their investment information from. It's not from Schwab's, and it's not from Fidelity, and it's definitely not from UBS. It's typically from TikTok. And actually, one thing that I found that was super interesting was CNBC came out with a report in June that said that the hashtag investment tag received over 270 million views. And those people then go to Robinhood, and to, I think, the point that Zach mentioned, and you could probably speak very well to this, having a retail facing product, you know, you then trade on something that's really easy and accessible. And so I think, you know, as it relates to, like, you know, information, and I think that brings in the question of responsibility of the platform to create not only accessibility to trade, but accessibility to information and education. I think to Zach's earlier point too about what even is Ethereum, it's a lot of people ask that question every day because most people don't know what Bitcoin is either. So I think it's really, if we double down on who's owning these assets, like how many of the wallets that own Ethereum are between $10 and $1,000. I'm not talking 250K plus, because that's really when you can classify the retail wallets and the retail engagement in the space. So I think that's a really, really important point to mention. And then to the point around DeFi, you know, the reason it had such a run up, and at least what I was seeing and our team was seeing, Joon, I know you work very closely with projects as well in this space, is that DeFi made it very, very easy to access platforms. You click your MetaMask, you connect it directly to the platform. You're able to access funds and pre-fund very easily with like 2 clicks of a button. You didn't have to review like a 15-letter number wallet that's not FDIC insured, and you know, cross your fingers and hope that $200 makes it in and out in one piece. And it was fun. And I think, Zach, actually, you could probably speak very well to this, but the aspect of fun, you know, like one thing I think about is Robinhood is valued, I think, now at $11.2 billion. They just raised their Series G. We're going to start running out of like Alphabet, you know, to
for each of their rounds.
Yeah, exactly. And you know, one of the things where we were like, the Robinhood trader came from Hertz. It was a penny stock, but that doesn't mean that the you know, retail that purchased the stock actually understood Hertz and the fact that it was bankrupt. And so I think I'd be curious to hear, Zach, how you kind of think about this as well, just having a more retail focused product.
Yeah, I mean, I think everything has to be really easy, and it has to be fun, and it has to be in a mobile app, and it has to look great, and you have to, you know, be able to find the exact button that you're looking for exactly when you want to find it in, you know, less than a second. And if you don't, then you know, close the app and you think that the experience sucks. Like, that's just, you don't have like the attention span to deal with any discomfort. But I think, you know, I think millennials don't get enough credit sometimes. You know, like we had this big market reaction to the COVID news. Stocks sold off aggressively and dramatically. Bitcoin did too. And then you had this wave of investors, primarily millennials, at least when you're talking about Robinhood's platform, who were buying stuff. And it was a great time to buy in hindsight. And I think that, you know, I think that despite the gamification and, you know, the kind of incentives to the visual incentives that Robinhood creates to train options, it's a much better environment for young investors to get trained today than it was 10 or 20 or 30 years ago. The simple fact that you can go and access these things and your friends are doing it too, and that you're trying this stuff out, maybe while you have less, less capital than you will 10 years from now when you're a little bit older, is really, really powerful. And it's fundamentally different than, how things worked like for my parents. And I think that all these platforms, if they don't already have cryptocurrencies, they're going to have them.
And Zach, that I think is probably one of the most compelling ideas around millennials and crypto, which is, all of the companies today, it's kind of slowly and then suddenly everyone is going to kind of offer crypto. And I think today we're kind of just again at that tipping point where there's just a handful of those financial services incumbents, or in the case of a Robinhood, someone who at one point was a startup, obviously now is very well established, but acting as a point of access for these younger generations of investors to access an asset class that didn't even exist 10 or 12 years ago. And so what's so exciting about it, and when you want to talk about trends, you talk about the infrastructure getting built behind the scenes to create those pipes and that connectivity that really can open this asset class to those investors. And, I think from my seat, those are some of the things I'm most excited about and really, really focused on seeing that I also know is being digested by the investment community as a whole as points of validation and speak to the staying power of the asset class.
And it's retail and institutional. Like we're all familiar with the Robinhoods and PayPals of the world. They get so much attention. But let's not forget, big banks, including ones in Singapore, working to make this available to their institutional clients, and in some cases their institutional and retail clients. And that'll eventually happen in the U.S. as well, but we're not really quite there yet.
Yeah, I think
shout out one thing DBS here.
Yeah. One thing I would just add to that too is like, look at how much of retail scooped up the most recently minted Bitcoin. I think PayPal scooped up 70% and Cash App scooped up 40%. So Michael, to your point, like definitely a tipping point, but it starts small and then it comes all at once. So I think it's going to be interesting to see as accessibility moves into the larger banks, Zach, that you mentioned, what is that going to do to this millennial trend?
But I mean, and if I may offer a theory as well, I mean, it's also like why did millennials decide to be so risk on when there was a big sell-off, right? I mean, I feel like part of it lies in the macro thing of just like there's no yield. Like you might as well take a punt buying stocks, right? Because what else are you going to do? And it's a little bit like you think about Japan in years of low growth, right? Like, you have to get into riskier and riskier assets to get anything for your money. So we have 2 minutes left. This panel is about millennial investment trends, but I thought, we'll go above and beyond. Let's talk about very quickly what happens to when Zoomers come into the picture, right? So millennials is 1981 to 1996. I'm barely in the millennial category, but what about the people who were born 97 and later? What do you guys think, they will be interested in?
I mean, crypto is certainly going to be one of them, if it's not already.
Yeah.
I am really interested in some of these like social token platforms where you tokenize yourself or you find a way to like tokenize something that you see. Zach, to your point, you mentioned something really interesting. Like we came from the generation sort of robo-advisors, whereas like our parents used to go to like actually see their wealth advisor. Like it's going to be really interesting if you can just like, pay a ton of people in the space for different like hashtag investment tags and see which one works best and a way to tokenize all of that, which is very far out there, but we'll see.
And things will just be more and more bespoke. I think like that's just a trend that's only increased and is only going to continue to increase, which is all about customization and convenience. And I think that's, speaks very much to that mentality of the next generation of investors.
Yeah, I mean, I may or may not have my own personal token, but you could go on Uniswap and look up the Joon token. This is not investment advice or promotion of any sort. 30 more seconds, Zach. You can do this. Zoomers.
I think retail will catch up to institutions in terms of having a bigger allocation to alternatives. I think that crypto is a big part of that story. And I don't know, I read something about like Little Yachty, the rap. It's like creative slogan, and apparently a bunch of people bought that. I'm not cool enough to have even known that that was a thing, but I think it went up, or it was subscribed or something. Yeah. So I think that's spot on.
Brilliant. Well, I think that's our time. Thank you to this great panel, and thanks to everyone out there who watched and listened along.
Awesome. Yeah. Thank you all.
Thank you.
Take care.
Okay, everybody.